amount of money into equities, a whopping 6,500 crore rupees being invested on Dalal Street in the last 1 month alone, the highest in more than a year. Prashant Nair is here to take us through the breakup. Prashant, you've been going through the numbers. Mutual funds have clearly joined the party. What does this mean?
So, big number in the month of August. Just a small bit before I get to the numbers. So the daily number that we get is essentially what mutual funds have done in the market, right? I mean, the DII, domestic institutional investor number that we get. The numbers that we are putting out here is what the mutual funds are taking in from investors like you and me. So, I mean, this is the inflow into mutual funds, and we are, for the purpose of this, looking at just purely equity mutual funds. So these are the numbers. December 2015, we started with about 3,600 crores. This was a big drop as compared to 2015. I mean, in 2015, we took in mutual funds, equity mutual funds took in $1 billion plus almost every month. So, the year 2016 started on a pretty subdued note. 2,900 crores, 2,550 crores, there was a negative number. Then in April, it jumped up to about 4,400 crores, jumped even higher to about 4,700 crores, dropped to 320. Last month, that is the month of July, was about 2,506 crores. But in the month of August, it's come back to almost close to $1 billion or so, 6,500 crores, the highest amount of money that equity mutual funds have taken in the last 12 months or so. The reasons could be many. The reasons could be the fact that there have been lesser IPOs in the month of August, and hence a lot of the retail money which was going into IPOs has come into mutual funds. Gold as a category hasn't performed, lesser money there. Fixed income also, I looked at the numbers, are lower than the month of July, but they're pretty robust, standalone. And of course, markets in August, especially the mid-cap pack, did very well. Mid-cap funds have been a big reason why there have been such robustness in monthly inflows all through 2015. So that seems to be at work here as well. The difference one has to keep in mind is the difference between what their mutual funds are taking in and what they're deploying. And that seems to be deployment seems to be trailing the inflows, which basically means that maybe across the board, mutual funds are raising cash levels and they would wait to put that money to work once they find valuations and market levels comfortable. Back to you.
All right, Prashant, thanks for putting that into perspective. But let's move on to the